Hello class, I am going to explain how to do petty cash transactions. So the interesting thing about petty cash is although it is an asset account on our balance sheet, the only time you actually record to the account petty cash is when you're setting up the fund or when you are reducing the amount in total or increasing the amount of what the fund is. You never record petty cash when you are reimbursing the account. So when you set up a petty cash fund, you're going to increase petty cash, so you'll debit the asset, and you're going to decrease cash from your operating account, so you'll credit cash. So now on our balance sheet, we have a petty cash fund. And then what you'll do is you'll do that by writing a check to petty cash. You'll go to the bank, cash the check. You come back to the office. Now you have $75 in a locked box so that you have cash there that you can spend. Now, in this locked box, you are always going to have the equivalent of $75, either in cash or in receipts. So when you spend something out of there, like let's say you decided to buy pizza, you do a pizza party and you put the $40 receipt into the box, and then you have $35 still in cash. So together they make $75. You're going to keep doing that until you're ready to reimburse yourself. So let's say that we spent $46.50 getting tiles cleaned, and we spent $15.05 paying somebody that brought merchandise to us, and we paid $5 for a package to be delivered, and we desperately needed some pens, so we spent $4.75 at the office supply store. So now we have a total of $71.30 in receipts in that petty cash box, and just a few dollars left. So we want to replenish that petty cash box. So what you're going to do is you're going to add up all of these. You're going to record each one of them as an expense where it belongs. And the other side of the entry is going to be cash. So then you'll go down to the bank with another check for $71.30 made out to petty cash, and you'll replenish your fund. When you record each of these expenses, this is what your journal entry will look like. Although I never agree with miscellaneous expense. And I guess I have to take this opportunity to tell you, I hate miscellaneous expense. I hate miscellaneous expense because if it's enough to record, then it shouldn't be miscellaneous, because what happens is it's like, well, it's just $46.50. Well, it's just $25. Well, it's just $100. But at the end of the year, you look at it and it's like, we have $8,000 in miscellaneous expense. We better go find out what those are, because now the amount is significant. So that's why I don't like miscellaneous expense. All right, so we have our miscellaneous expense, our merchandise inventory, our delivery expense, and our office supplies expense. And then we have our $71.30 to cash, and what we've done is we've written a check that says petty cash on it. We take it to the bank and they give us $71.30. We bring that back, we put that money back in the petty cash fund. Now how much do we have in that box? $75. We have no receipts left. Those are filed away with the journal entry and the check. We have $75. We're starting over again. Now sometimes you don't have the exact, oh, this is increased. So let's say we wanted to increase our petty cash fund. Only when we increase it or decrease it do we hit the petty cash account. So if I wanted to increase my petty cash fund, I'm going to debit petty cash and credit cash. Now I would have $100 in my petty cash fund and $100 in my petty cash box. If I wanted to decrease it, I would debit cash and credit petty cash. Now I have $55 in my petty cash fund. All right, that's petty cash.